And in our top business story, the DMCC has released its annual report with a record-breaking 2,016 new member companies in 2016, an increase of 14% on the previous year, and an average annual growth rate of 33% over the last decade. The DMCC is now home to 13,500 companies, making it the largest free zone in the world. Other key achievements included record-breaking trading volumes of over 19.7 million contracts, worth $440 billion on the Dubai Gold and Commodities Exchange, an increase of 36% on 2015. The DMCC trade flow recorded 11,412 Murbaha transactions with a total value of 58 billion dirhams, a value increase of 405% compared to 2015, as well as the appointment of the DMCC Executive Chairman Ahmed bin Sulayem as Global Kimberley Process Chair on behalf of the UAE. Commenting on the DMCC's performance in 2016, the Executive Chairman Ahmed bin Sulayem said that in 2016 they welcomed an average of 7 new companies every working day, bringing significant foreign direct investment to Dubai.
We face different challenges and different environments from year on year, but one of the key important achievements that I feel that DMCC did in 2016 was it's the consistency that we showed. We had our conferences, whether it's the KP conference or the World Diamond conference, the Tea conference, and basically I think the number one thing that I'm proud of is that we keep the ball rolling, and the DMCC has been engaged the whole year, which brought up these successful results. I believe the team and the management in DMCC are hungry and feeling that there is more to do, and we keep looking. It's exploring new markets. It's ensuring that the businesses around the world, maybe today they're not ready to make a jump or expand into DMCC, but they're aware of the alternative if things become difficult or an opportunity arises in our area that fits their business. That's why when changes happen around in the markets in the world, you do see quick movements that happen in Dubai or Hong Kong or Singapore, some businesses that move and shift around these areas. So I take pride knowing that DMCC on the commodities level is on the same level as London, Hong Kong and Singapore.
Apartment and villa prices fell in Abu Dhabi in the first quarter of the year as property experts blame a sluggish job market and shrinking oil and gas sector, which is putting extra pressure on the Abu Dhabi real estate market. According to a report by Chesterton's MENA, it was revealed that average apartment sales prices in the capital fell by 1% in the first quarter, while villa sales prices dropped by 9%, partly due to public and private sector downsizing, which is a byproduct of the static oil and gas sector. While sales prices are expected to further decline due to redundancies in a relatively weaker oil and gas sector, property experts noted that there is a trend towards downsizing or moving to more affordable areas, and this is expected to continue until 2018, when an expected increase in government spending could improve market sentiment. It was also reported that some areas like Al Ghadir, Al Reef and Khalifa City in the capital witnessed the largest percentage drop. Meanwhile, Al Raha Gardens also witnessed a sales decrease, although less severe, of just under 6% to 931 dirhams per square foot. Some areas bucking the trend include Al Reef downtown, which saw an increase of 1% to 948 dirhams per square foot, while Al Reem Island remained flat at 1,362 dirhams per square foot. The UAE is leading the region in retail tourism, with the Mall of the Emirates alone attracting 56 new hotels into its vicinity over the last 10 years. That's according to the latest report by the Dubai-based real estate firm Colliers International. The report revealed that hotels developed in and around Dubai's major shopping malls can expect to post an average daily rate of 25% higher than hotels that are not located with a major retail development. One of the key findings highlighted that hotels such as those clustered around Dubai Mall of the Emirates and the Dubai Mall enjoy stronger business performance overall, not only beating seasonal fluctuations in tourist arrivals, but also contributing in the drive to attract more tourists over the quiet summer season. According to officials, the idea of a combined retail, leisure and entertainment destination has really taken off in the UAE, and there is a massive demand for urban tourism from Indian, Arab and Chinese visitors. The findings revealed that since the opening of Mall of the Emirates in 2006, the number of hotels and serviced apartments in the area has risen from 4 to 58 this year, totaling 8,654 keys overall. According to the report, the UAE has the strongest retail tourism sector in the region, and Dubai takes the lead among the 7 Emirates, with retail accounting for more than 40% of total tourism spend. Mashreq Bank has declared its financial results for the first quarter, ending the 31st of March this year, posting a 3% increase in net profit. Mashreq revealed that its net profit increased by 2.7% year-on-year, to reach 546 million dirhams, primarily due to a 15% decrease in impairment allowance. While net interest income and net income from Islamic products were down by 3.6% year-on-year, off the back of flat loan growth, Mashreq's best-in-class non-interest income to operating income ratio remained high at 41.6%. Total assets in the bank decreased by 1.7% in the year to reach 120.7 billion dirhams, while customer deposits declined slightly by 0.8% to reach 76.4 billion dirhams. It was further revealed that the bank recorded a strong liquidity and capital position, with the loan-to-deposit ratio remaining healthy at 80.5% by the end of March this year, and liquid assets to total assets stood at 28.1%, with cash and due from banks at 33.9 billion dirhams.